Good evening. Welcome to tonight's webinar. I'm Brian, your host for tonight. Before we officially start our webinar later, I would like to have a short survey here. I will launch a poll for you all to fill in. So you all help me to fill in whether can you hear me loud and clear. The poll is open. You all may vote whether can you all hear me clearly. All right, thanks for the response. Now I will close the poll. As usual, before we start our tonight webinar session, I would like to make a little disclaimer here. Whatever we share tonight is just for general information purpose and it's just for general information and educational purpose. It does not constitute any recommendation to buy or sell any investment products. Here, I would like to make a little bit introduction about our company, Phillip Capital Sdn Bhd. Phillip Capital Sdn Bhd incorporated on 7 October 1995. It is wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd, formerly known as Phillip Futures Sdn Bhd. And Phillip Capital Sdn Bhd is a trading participant of Bursa Malaysia Derivatives Bhd. It is a holder of Capital Market Services License, CMSL, and it is participating organization of Bursa Malaysia Securities Bhd as well. And apart from that, we are also Capital Market Service License holder, as I mentioned just now. So, which means basically we are legal and regulated broker in Malaysia. Here are some. Here are a map that show that our Phillip office nationwide. Our headquarters located in Kuala Lumpur, and we have 11 Phillip investor centers across Malaysia. We have Phillip Kuala Lumpur, Phillip Penang, Phillip investor from Sarawak. We have a Phillip investor Cebu, Phillip investor Kuching, and KK. We have a Phillip investor center Kota Kinabalu. Next will be our award winning. So here are some of our Bursa Excellence Awards that we get from past. As you all can see, from 2017 and 2022, which is last year, we did get awards from Bursa. For last year, 2022, we get first runner-up for Best Retail Derivative Trading Participant and second runner-up for Best Overall Derivative Trading Participants. Next will be our global network. Phillip Capital Sdn Bhd is an international company. Our headquarters is Singapore, and we have numerous branches across Asia Pacific, Europe, and even Africa. So as mentioned here, we're having branch in France, Turkey, Dubai, United Kingdom, United States, and so on. This is our global coverage. We have few exchange listed here. We have CME Group, Chicago Board of Trade, Comex, NYMEX, SGS, Singapore Exchange, and Bursa Malaysia. Phillip Capital Sdn Bhd is a one-stop solution for your trading. Here are some of our products. We have futures, which covers index futures, agricultural futures. As you all know, agricultural, like the commodity, we call as commodity products, like palm oil, soybean, and so on. Metal futures, energy futures, interest rate futures. Equities and stock, we have Malaysia shares, US shares, Hong Kong share, Singapore, and Australia shares. Control for difference, we're having Bursa share CFD, NYSE share CFD, Nasdaq share CFD, and US index CFD. Phillip Capital is also your broker of choice. We have award-winning multi-asset broker. We are 24-hour broking and execution support, and we did provide advisory service as well. We also offer latest market news and also wide array of products and also online account opening, which means you all can open futures, stock, and also safety account with us by using online. We do provide online account opening service. Now, for Phillip Capital, apart from all the benefit that I mentioned just now, we did also provide one-to-one coaching session. So if you wish to have more personalized coaching on any doubts that you have, whatever, whether on stock, on futures, or other, or CFD products, you can approach us. We do provide one-to-one coaching session to you. And we did also having free seminar and webinars, like right now that you all are attending. We are having free webinars right now. And like I mentioned just now, we're also having free online account opening. For free one-to-one coaching, it covers from introduction to futures, CFD, stock trading, and it also covers for the product knowledge. We will coaching about any knowledge that regarding commodity products or other products that you might interested, and also platform coaching. The specific platform I will explain later, and also charting system. Here's a QR code for our upcoming seminar and webinars. So you all is allowed to scan the QR code for our upcoming events. All right, next. This is our weekly market call. We also conduct this weekly market call, so you all can join our research team on the market views and updates for newly published reports every Monday at 11:15 a.m. Or if you wanna have some knowledge for technical analysis, like how to spot entry or exits, or you wish to learn some specific technical indicators, you can join our technical analysis market call as well. The time will be every Monday night 8 p.m. This is our online account opening platform. So we have the platform for 3: stock account, futures account, and safety account. And the specific platform I will explain later. And you all can scan the QR code as well if you are interested to open account with us. Now let us move into trading platforms. For trading platforms, futures, we are using Phillip Nova. It's very simple to use. We have mobile app and web app as well, and web page version as well. Our platform is equipped with wide range of technical indicators, live charts, market depth functions, and you can get access to both local and foreign products. If you are not our client and want to try out our platform to see the interface, which means you wish to register for demo account, you can scan the QR code below to scan for demo accounts. This platform is for our stock market, for our stock product. It's called Poyens Global 2.0. For this platform, we offer all-in-one stock watch list, charting indicators, exchange top 30 movers, powerful stock analytics, and market depth. So this platform is suitable for new and experienced investors. Next will be our CFD platform. For CFD platform, it is user-friendly interface, and we did provide live charting. It also provide price alerts as well. We're also having live market, price mirroring exchange, and advanced order type. So next, we go into our promotion. For Phillip, we have promotion, which is trade and earn with Phillip. For this trade and earn with Phillip, You all can stand a chance to win exciting prizes like iPads, AirPods, Apple Watch, and also up to 1,800 of the Touch and Go reload pin when you start trading any products with us. And that include either futures, stocks, or safety. Of course, the more you trade, the more you will get the chances to win the reward. This promo will run until the end of this month, which is 31st of December. You all can scan here for more info. Now, before I officially dive into our topic today, let me spend a little bit time to introduce our honorable speaker, Mr. Zhong. Zhong is a future trading dealer at Phillip Capital, holds a bachelor's degree in finance and investment. His expertise lies in analyzing market outlook, economic conditions, and interrelated factors to provide mid to long-term insights. Zhong is also a National CFA Institute local research champion, combining market analysis and technical skills to empower clients with effective trading strategies. We are very honored to have him on board with us tonight to seize the opportunities to ask him any questions if you have regarding the stock market. By dropping your questions in the comment box later, and we will address them at the Q&A session. So now let me officially welcome our speaker of the night, Dan Zhong. Dan Zhong, the screen is you.
All right. Thanks, Brian. The host. You all can hear me? If yes, please drop me the in the chat box. All right. So yeah, before start, let me introduce myself again. My name is Zhong, the speaker for tonight webinar sessions, and today sharing mainly on the market and economic outlook in 2024 and how we can plan our trading or investment and look for opportunities in the market for these coming years. So first of all, it will be the coming quarter, which is our first quarter economic outlook. The sector they will be easily affected by the macroeconomic environment and the AI topic in 2024, and some potential topic which is an individual stock counter discussion. And in this topic for 2024, I will discuss one US AI stock, which is C3 AI, and the second one is BYD, the EV stocks, EV company from Hong Kong Exchange, PRT, and one another stock from our Bursa Malaysia market. So recently we are coming to the end of the year, and here's some recap for our global US stock market and our local market. As we know, the major US index is rise a lot this year, and especially compared to the previous year. The Dow Jones have broken this year high level, meanwhile Nasdaq and S&P 500 also close to that certain area. Therefore, we can conclude that this year that US market or US sentiment towards the stock market is still very strong. So see that even though in this chart I point that in the particular period, the stock market is affected by US 10 years bond yield, and at that time the bond yields was growing a lot, right? So I think all of us still remember that and affect market very heavily. I think the rate that time was close to 4.9 or 5% something, but now the yield is dropping to the approximately 4.1 or 4.2%. So indirectly will benefit the stock market. And the yellow line in the chart is showing the index movement of our KICI stock market. The market is currently still recording a drop compared to the beginning of the year. So I think all local investors are already familiar with our market movement. Like even the US market is rising fast, but Malaysia overall sentiment is still very weak. So the chart is showing a huge difference compared to the US Dow Jones Index. And the market is not doing good in the second half of the year, especially is because the depreciation of Ringgit Malaysia and unsatisfied budget 2024 by our Prime Minister. So it's already distract a lot of foreign investors to cash out and convert their cash from Malaysia ringgit and from our Bursa market. Yeah, that is a fact, and hopefully next year our market can performing better. So as I said just now, three index in US, Dow Jones, Nasdaq, and S&P 500 is doing great in this year. Especially Nasdaq is recorded 35% growth, and recently, and S&P 500 is already record the double-digit growth, is 80% of growth in the first half of 2023. And before we want to start determine the next direction of the market, we need to know that what's the driving factor of the index, and the several economic factors is the key driver factor. And in general, economic data have an opposite direction with the market. So if one is going up, means another will be going down. There is a inverse relationship between of them. So here's some key or index we need to monitor from time to time. For example, like interest rate, US inflation rate, PMI, which is Purchasing Manager Index, and Consumer Price Index, and the last one is GDP. So that's why we can always hear from the market that why the interest rate is affecting the market or technology sector. So the simple reason behind is the inverse relationship between of them. So imagine that when the Federal Reserve is rising the interest rate, so people will tend to save their money in those fixed income instruments like bonds or banks instead, or rather than to invest in the stock market. So that's the simple reason behind them. When interest rate will up, so market will drop. And for suggestions, I have here some advice for the attendees who want to get the first-hand news regarding those economic indicators. You can go to the Investing Note website, and like I showed in the slides, and see under the economic calendar tab. So some of them, these indicators are announced monthly, some of them are quarterly. So I would say like these indicators are most important to estimate the next year market directions. So in this Investing Note website, you can see the date of the indicator announced and the importance. So there is star there. When the most is the 3 star, so 3 star is means the most importance of that announcement. And here I would give some example regarding the indicators is inflation. All right, as I said just now, inflation can be affecting the financial market, and in the graph you can see that there is a dropping trend for inflation this year. This is for United States market, so we can conclude that it's good for economy because there is a growth in the economy, but still not that excessive. So you can consider that there is a steady growth for the U.S. economy, but not that overheated. Under a growing good economy, we can see employment decrease, more people have a job and getting paid. It's good for all the people and the market. But the overall, the phenomenon will not continue so long. Since the inflation rate already dropping since the 2022 until recently. So I would expect that inflation rate of United States is expected to rebound in 2024 because continued growth of economy also will encourage the US Federal Reserve to raise their interest rate and to prevent overheated economics. So as we know, rising interest rates are not good for the financial market, as I said just now. And here we come to Consumer Price Index for United States, CPI. CPI is one of the popular measure for inflation and deflations, and the more people spend, the more inflation rate will be achieved. So in this chart, we can see that the CPI for US is dropping a lot since beginning of the year, but now the CPI index is remain quite stable around 3.2 to 3.7% something when entering the second half, means June to December of the 2023. Actually, 2023 US market is very bull. Why lower CPI will lead to a bull market, given that there is a lesser spending, right? Because there is a decreasing of consumer price index. This mainly because when there is a lesser spending, means that economy is not actually growing because people has a lesser money to spend. So in turn, it will give a signal for United Federal Reserve to not to raise their interest. So when people expect that Federal Reserve will not raise interest rate soon, so people will look good for the market because interest rate is low, everything there. Those investors will choose to invest in the financial market rather to keep their funds in government bonds or banks like fixed deposit, that thing we call fixed income instrument. So this also match with what I said just now. When the economy data is not doing good or bad, market will move in the opposite directions. So for the summary of the US economic outlook, the environment currently is likely to pressure the Federal Reserve to raise the interest rate, which is unfavorable for the stock market. So, but this thing we need to monitor from time to time, because when there is a change in the macroeconomics environment, the things will be different. So for anyone would like to invest or trade in the US index, uh, so you can keep a look on the CPI or inflation rates for the coming quarter for the US. And after we talk about the world largest economy, United States, now how about we discuss the second largest economy in the world, China. Here's the charting movement for A50 index. A50 index is something similar like our Bursa KLCI index. It consists of 50 company stock with highest market cap in China. So it's also the indicator to track overall China stock market. But in this chart, we can see that the index is dropping all the way in this year. And this may due to their worsened economic. So later on, I will discuss that how going on with their China domestic economic conditions. So when we talk about China, and we still also look on the Hong Kong Hang Seng Index because both of them are sharing the same momentum. Similar with A50 index, we talked just now, Hang Seng Index is also the indicator that consists of Hong Kong 60 companies with the highest market cap. Can be said that A50 and Hang Seng is the worst performing pair of index in this year. And particularly from the latest PMI data announced by China government, I think it's from the last Saturday, it's not doing good. So recently, A50 has broken below its 1-year lower support level. And the market for A50 and Hang Seng could be very bearish now. So we as investors, it's a good way for us to digest and understand their latest economic data, thus analyze that whether recently dropping index is already digest the bad news and waiting for the rebound or not. So because the index now is relatively at the low level, so it's worth to for us to have a look. So it's a better opportunity before it rebound and go to the previous level. Actually, for China, it's unlike US economy. The market is always saying that US economy is entering inflation. The Federal Reserve need to raise its interest rate to control it. But China economy currently is in what we call deflation stage. So the most famous event about China economy is this year regarding their crash of their real estate and property industry. This year, China leading property player Evergreen, what we call Hengda Jituan, already declared bankruptcy and lead to a massive debt crisis. So the most essential part behind beside interest rate is the property market, because when the property market involves too many people and when it crashes, it will lead to a chain reactions like banks start to have a bad debt because the developer or this property player are unable to pay back the loan amount. Contractor who commence the construction work cannot receive a payment after construction, and for those house consumer need to pay the installment even though their house is still construction in the constructions and stop, so they could not get their new houses. So in this case, their government effort is very crucial to rescue their economy in China case. The outlook for coming first quarter 2024 is still remains sluggish. So because their economic volume is very huge and for sure it will take some time to recover back. And here I'm showing the PMI data purchasing manager index and the latest consumer price index announcement by China government. Both of these important economic indicators are also dropping, especially since September of 2023. I have highlighted the bar and the figure for both of these indicators since second half of the 2023. As we know, China is always famous for their internal demand. They have a lot of residents compared to other modern countries or well-developed countries like Japan, United States, Germany, because these countries are relying more on export. But China is different. Their spending ability is very strong, so they're able to make up for most of their country GDP. So the reason behind their dropping economy is not because of losing in their export sector. The world environment is not heavily affected, but their people spending ability is increasing. Recently, the most interesting issues has been their property sector problem in China, and the fresh grad in China unable to get a good job after finishing their study. They turn to commence a small business or something, just doing business on their own. Additionally, high profession students like the master student of nurse doctors, for example, are able to get a good job, but the salary is too low. So I think this phenomenon is easily detected or discovered in the social media. So if you all want to discover more, or you can have a look on their growth of employment level, which also means showing the negative growth rate. When there is a decreasing spending in an internal demand-oriented country, so the circulations of the economy will be slow. In turn, those sellers will find it hard to make money. Factory production need to be slowed down and others. So in this case, how China can solve this economic problem is their government initiative. Their government effort is very important, and what policy to announce, what policy to execute is very crucial. And due to their large economic volume, I would say that it will take longer than expected time to overcome their deflation economic conditions. And here's the summary for China economic and stock market in 2024. China is also likely to enter a prolonged period of below potential growth because of their deflations, and slow recovery of China market is expected is 2024. At least from now, we didn't see any rebound signal or reversal signal in their economic condition yet. So there is some downside risks for us to consider. The first one is their ongoing property downturn. Is their government able to solve this problem, and the persistent consumer confidence weakness and related weak spending? In case their CPI is continue dropping, so it's quite hard for them to rescue or stimulate their economy to the previous COVID pandemic level. And the another one is the deteriorating external demand for the China. So there are these all for the sharings for United States and China economic outlook for the next year. So let me have a drink before we can proceed to the next topics. And here we know that focus topic for this year is AI, artificial intelligence. NVIDIA is increasing a lot, as well as Microsoft and AMD. So you can refer to this slide for the share performance in this year. All of them have increased a lot. Like the first one is NVIDIA, is rise about 280% in 2023. And for Microsoft, which is a major investor for the current viral product or company OpenAI, so also rise in its share performance like 80%, nearly 80% in this year. And the other one is MD, also double up its share price to currently 130 US dollar. So that's a trend for 2023. And it actually is the same viral things like metaverse theme in 2020. So do you guys still remember it? During 2020, the Facebook metaverse theme is very hot. So the thing are the same for the AI stock in 2023. So I will discuss why AI stock is still a trend in 2024, and of course there's some downside risks for us to be aware in case we want to start trading or enter in these AI company stocks. So why will so many institutional investors start to be involved in AI stock? AI stock actually can be helpful in many sectors. I got list down some sector that AI can involve. The first one is automation, self-driving automobile, medical, healthcare, AI chips, robotics, and education. The AI trend is actually not the trend that we saw before this, like construction or technology sector or commodities, because this sector can become a trend because of the changing of macroeconomic environment. And the AI trend is categorized under the technology. And now we recall back to 23 or 25 years before, in the year of 2000. Yeah. During that time, you know that the technology is launching a lot of smartphone devices or computer, and it changed the world. And what we call is internet in year of 2000. So the reason why most people is excited for AI is because we are expecting something that creates huge difference in the world. So there is a chance for people to able to get success or get rich. Just imagine that if many things in terms of global remain unchanged, so people may find hard to achieve what we call class gap or economic gap. So people may deem this AI as industrial revolution for the fifth, and just similar with the people expect for the internet in 2000 year or 2000. And we can see there is so many health, suffer, and wealth regroup and reform when there is a comes of industrial revolutions. During that time, so many world-changing companies is appear like Alibaba and Amazon. They change people's spending habits. They turn people spending physically to online. Apple changed people habits in mobile phones industry, and Didi and Meituan in China also change people lifestyle in ordering foods online. So the same concept applied in today's world. Electronic vehicle also change people awareness to renewable technology. Open AI change people mindset to make the thing be more efficient and less reliance on manpower. AI is still a trend absolutely for 2024 for my opinion. So for example, in United States and China, you can see there are more and more listed companies start to engage in this AI industry. So here, let us take a look on those AI industry giants stock price. This data is get from Yahoo Finance, and it's actually showing that how the institutional investors are looking good on the AI trends. In MD stock, we can see that there is a P ratio uh, for MD is 4-digit figure, but when you research or go to any analyst website, analyst report, their forward PE is just 2-digit figure for this MD stock. So actually 4-digit PA stock ratio, PE ratio is actually not always seen. So this already clearly illustrates that how that Wall Street investor is looking good for the MD or AI prospect. But before we want to step into this high valuation stock, we might monitor them in this. Is there a huge growing space that is it worth for us to go or not? So we can easily know that AI trend is still not stopped yet for currently, but there is still huge downside risk. Once the trend will end one day, the momentum for share price also will drop. So it's great. The momentum for share price to drop is also greater than the momentum for it to go up. So same goes to Nvidia. The PE ratio is relatively high when we compare to its competitor. Yeah, and this one is Taiwan Semiconductor Manufacturing, TSL. So in 2024, what's thing that we can monitor for AI? First thing could be AI giant share price movement and the PE ratio. In case their business earning is unable to catch up with the share price increment, so they may lead to a market that thought that these AI stocks are overvalued, so may lead to a selling pressure in the share price. Due to its high PE ratio, it is also sensitive to the interest rate. And the other downside with AI stock is their function is still remain question. For example, one of the third of why AI related stock in China is about 66 stock is still remain losses in their business, but almost all of them is having a PE ratio over 100 digit. So you know that their business not actually making earning yet, but their share price is growing a lot compared to to their fundamental business. Example, I show some example that this company in China that start to involve in AI business but still making a loss, but the share price is going a sky high level. So for the AI trend, for you all who are interested to invest or trade, you might monitor them because the price is very high now. There is a huge downside there. So here comes our last session of the day. It's about the stock pick that I foresee for the 2024, which is backed by the good fundamental business. And of course, this is just a suggestions from myself. Maybe you are interested, you can do more research or consult your advisor. The first stock I want to recommend is the C3AI. It's from Nasdaq Exchange and it's one of the United States AI stock. And the next one is BYD from Hong Kong Exchange. And for the last one, after we talk about AI and overseas economic outlook, maybe you guys also interested to hear something regarding our Bursa Malaysia market. So for the last stock, I would suggest Sunway Berhad. I think most of us is more familiar with this stock compared to C3AI and BYD. Here's the chart showing the share price movement in this year for C3AI. So the current support is about at the level around 23 US dollar and resistance, which is the highest level in this year is 48. So there's an upside space of 110%. For the information, actually C3AI is a leading enterprise software provider to accelerate digital transformation. This is what the things that most enterprise and big player, big industry player to looking for. The proven C3AI platform already provides a comprehensive service to build enterprise scale AI application. Means that the client, most of the client are B2B instead of B2C client. So one of the reasons I'm looking for this AI stock is in the next year is because of their strong company cash flow and healthy balance sheets. C3 AI stock actually is still quite new company compared to those famous company Microsoft, Amazon. This company is founded on 2009 and currently their business is still record losses. C3AI is still losing money on the bottom line because it's investing heavily in the growth and research and development segment. But the surprisingly fact is the company is still have a lot of cash. It's about 762 hundred millions US dollar and their marketable securities. This figure you guys can refer to their annual report. So they're able to sustain the loss for this size to target for their growth, research, and development in the future. So even though their business is still making a loss this year, but the management is expected to turn profiting by the year of 2025. Okay. Then for the another point for C3AI is their service is in line with the industry standards for software as a service provider. They have a robust customer acquisition strategy that includes joint selling agreement with those AI giants, Amazon, Microsoft, and Alphabet, Google. So they're expert in B2B for industry, for business processes and enterprise system. So in turn, direct demand for those AI giants because we know that Microsoft and Alphabet is investing a lot of their resources, their money in commencing their AI business. So AI C3 this C3AI company also can be one of their what we call partner with this AI giant when they commence or first entering the AI industry. Okay. So for the summary for here, I would like to add some summary for C3AI. As one of the few AI business company get listed in Nasdaq and have a healthy balance sheet, C3 AI is a world for a look in the next year, but eventually it had to prove also to the investor that it can generate positive earning if want to see a sustainable lift or up increment in the stock price. Because the main reason the share price of C3 AI can increase a lot in this year is due to AI trend is become more viral and become more clearer. Therefore, if anyone interested to this stock, you can aware and monitor its report for the coming quarters. Let me have some drink before we proceed. And the next topic will be BYD. Yeah, in this charting, the price not moving so much in 2023 yet. And from the support level to the resistance level, which the higher price in 2023 is about 40% of upside space. We look into the financial figure for BYD. From this 1 year data compared to previous year, BYD actually is having some improvement. They are having improving revenue and net profit. Their business improve every year, and they improve also their margin from 30% to 80% in the year of 2023. According to PACC, the China Car Passenger Associations, the car sales figure, we know that BYD, their major market is in China, but actually the overall car market in China, their car sales figure is decreased in 2023 because of their worsened economy. But BYD is still able to deliver more vehicles. Their sales grows even in this difficult environment. That's why we can see how consumer is prefer BYD when they want to spend their money on buying cars. BYD is actually more likely by consumer over the another electronic vehicle competitor in China like Xiaopeng or 蔚来汽车 Neo. And when we talk about EV, we can show that thing about Tesla. And let's see how the BYD figure can mean when we compare to the Tesla. This chart here is showing the car sales of Tesla compared to BYD. Clearly see that Tesla is still had more sales volume throughout the years, but nowadays BYD is almost catching up with the Tesla. The sales growing speed is actually greater than this United States EV giant. And after we see the sales from BYD and Tesla, here's the rate of the growth. BYD actually is having a more growth rate to compare to Tesla. And for the company prospect in 2024, BYD already building an electronic vehicle factory in Thailand and set to begin their production to cater the robust market demand, and as well in Brazil. So different with another automobile makers, BYD actually launched lots of models to cater a different segment of consumer markets. Like they launched their small CU and Dolphin model for the affordable consumer market, and Seal and Yangwang model car for the premium customer market, which is also come with a higher selling price. And I had summarized and catalyst and disadvantage for BYD in 2024. The good things for BYD in the next year is they still remain positioned as biggest electronic vehicle player in China, and they have positioned themselves as the 10th automobile maker globally. So in China, there are more and more population start to accept electronic vehicle trend because due to their high fuel price in China. This also accelerate people to choose this EV over the traditional fuel automobile. And recently, their government is also putting a lot of effort in pushing this EV market, like allowing Tesla to open a factory in their company. And for sure, this effort from the government also will stimulate China economy and BYD sales for the next year. But we also need to be aware some bad things about BYD in the next year is currently A50 index and Hang Seng index performance is still very bad because people with investor escape from this China and Hong Kong market, and this bad performance from the overall market will be affecting investment sentiment towards BYD because BYD is still Hong Kong stocks, Hong Kong listed stock. And China economy remains slow recovery, also one of the another disadvantage for the BYD in the next year. And here we comes to the Sunway Berhad. You guys can take a look on its share price movement for this year. Currently, the share price is growing a lot compared to the beginning of the year. And for the recent support and resistance level, there is an upside space of 10%. As we know, Sunway is a company that involved in various segments of business, and I would like to highlight its healthcare segment, which one of the reasons that I will pick this stock in the next year. Recently, Sunway is aggressively expanding its medical center and healthcare segment. Particularly, their medical center in Sunway City and Velocity is doing good, in which able to cover the startup expenses cost for the newly opening medical center in Penang. So this fact also can be discovered in their annual report. And Sunway Healthcare Group also will further expand its business in Perak, Selangor, Kelantan, Johor, and Penang. One additional thing from their management perspective, they are working hard to get Sunway Healthcare Group to get listed in Bursa market around 2025 and 2026 year. In case Sunway Healthcare Group able to get listed, there will be additional valuation for the overall Sunway company. And another key point for Sunway is related to the rapid development in Johor states. Sunway Berhad are backed by a promising land bank and Johor development future. There are lots of land in Johor. Recently, the market is discussing the rapid transit system (RTS) between Johor and Singapore, and Johor State's government also monitored this project very closely. RTS is expected to be done by year 2026, and for sure, it's good news for Johor State and Sunway Berhad. In turn, it may facilitate population attractions in Johor and spending. So Sunway owns a lot of land bank there. Believe that Johor development also able to benefit Sunway Berhad. And one more thing is the construction of special financial zones in Iskandar, Malaysia, which is the initiative from our Prime Minister or our government to further develop the Johor states. So combining these few stocks, these few selling a key point for the Sunway, believe that this company currently is proving that they're having a good and solid business, and the recent share price performance is start to rise, and maybe it's a sign that market already start to be aware or monitor this company for the next year. And for you all who only want to invest in potential growth stock in Malaysia rather than overseas market, you can take a look for the coming report from Sunway, and for sure, you need to be aware of the share price movement of Sunway as well. And from a fundamental analysis perspective, if you're an investor that invest in the share of stock based on their business growing or for their fundamental business, we need to know that a company with improving business will surely reflect in the growth of the share price. In terms that business making money, for sure, one day their share price will be rise. So just in terms of timing and market momentum, here's our the factor that we need to conscious from the overall aspect also. Even though some company proving they are able to make more money, but when the market sentiment is very weak, so there's a disadvantage for the share price to rise also. So I think this is all for my sharing today. Hopefully today my sharing, the AI trend discussions, the economic outlooks, and the stock picks can be understand and clear for you all. So later on we'll open up for Q&A sessions. If you have any inquiries, you can just drop your questions there. And here, please let me promote our platform for securities. If you feel interested after hearing today's webinar but find no better place to start your investment, or even you want to enjoy our investment service, you can contact us to open account and enjoy the platform. Then you're able to trade or invest the index or company that we discussed just now. So here comes to our Q&A sessions. Just drop your questions here if any. If you have any inquiries or questions regarding the next year directions or how can plan for in a certain product or index in 2024, you also can raise your questions here. Okay, let me see the questions. Please provide outlook for the gold rights. Let me have a look here. Yeah, I think there's some problem here. Let me have a look. Please give me 1 minute. Okay, the first one is Sunway versus YTL. What's your view? Recently, Marcus also already comes up the news that YTL is collaborating with the NVIDIA rights. So they also ready to entering AI related business for the coming quarters. So as I know, YTL and YTL Power, these two stock already rise a lot in their share price in this year. So even there's a chance for them to entering first 30 stock and become the component of KLCI index. So in terms of their share price, Sunway is still the growing space. The potential space is still very huge compared to YTL. But the things is different because YTL is ready to ride on the trend of AI, but Sunway is still not yet. So yeah, if you guys have interested in YTL, you monitoring AI trend is also very important because we know that NVIDIA also leading the AI trend and now YTL collaborating with them. Uh, so it will be additional catalyst or momentum for the YTL share price. So for the Sunway, it's more focused on the Johor developments and their overall business earning. Hope this answering well. So and we come to the second questions. KLCI index is dropping over 20% for the past 10 years. What is your opinion? Okay, for sure we know that KLCI also not doing good in this year because of the distractions of the foreign investor. Many foreign fund already escaped from our market. So the main reason is still that the foreign investor is what we call they are thinking not opportunities in our economics. So compared to the China and Hong Kong economic, they also doing very bad in this year. So the thing or the momentum to help the KLCI also is we need to attract the foreign investor to come in. So our government policy or to allow like other mega company from overseas to operating country or to open a factory or commence business in our country is also very important. So I think we all know lah. So KSI index momentum is like weaker when we compare to US because US all the way up in this year. So we need to be more patient when we invest in KLCI. So when you compare KLCI and US, for sure, when you look back, actually US can providing a very fast and very steady growth rate of return. So, and the next question, in relation to the platform for share trading, are they real time or delay? Okay, for our platform, for the local market, it's live, and for the foreign country like US or Hong Kong, it's delayed for 50 minutes, but you can subscribe for the free and live price free. So, any more questions here? Is the Malaysia stock market start to turn bullish? Mm, I would say that there is still no signs of a rebound and reversal for the Malaysia market so far, especially for the second half of 2023. We know that this is a period that our KLCI index rise a lot, right? So I think it's during the period of our elections. So our market is still considered smaller when compared to those uh, China market or US market. So uh, in case you want to make our Malaysia stock market become bullish, for the first is attract those institutional foreign investors to come in, and our local institutional investor to invest also. So far, no any signs yet to represent the overall market is doing good, but you can look for certain stock in the different industry that able to ride trend in the change of the macroeconomics. So if no questions here, I think here's the end of our webinar sessions and today webinar sharing. And yeah, if you're interested, you can scan this QR code to open account or consult any financial advice or suggestions from us. And here's our contact. You can call us or drop an email regarding your inquiries, and we'll get back to you as soon as possible. So thank you all for joining. Good rest for today.